Hey, welcome back, traders. Welcome to our daily forex forecast. And on today's episode, we are going to look out for what we anticipating for the almighty FOMC. We all know that tomorrow is FOMC meeting. That means our price is more likely to deliver very impulsively. Well, today was a very interesting day. We have a very impulsive price delivery, which is good, and price has delivered far and close to a higher time frame draw on liquidity on DXY. So currently this is dollar index, and I don't know if my cursor is showing perfectly. This is the dollar index, and yes, we talked about yesterday that we are anticipating for DXY to have an efficient price delivery with previous week Friday high before we see a lower price. Yes, we are in favor of lower price, but we did not see that retracement, right? Maybe a smaller retracement for a lower price to continue going higher. So sorry, to continue going lower. So well, since that was not the case at all, but one thing we can see is that today price actually delivered a very impulsive candle. We sweep this intermediate on the XY, we sweep the intermediate draw on liquidity, and price is still showing heavily that it is going for the monthly candle range low, which is a CRT candle on a monthly time frame. This is the candle range low, and price is seeking for it. Now there is a theory or support these buyers. I'm anticipating for DXY to retrace back into this liquidity that is already swept before going lower. We might see it, we might not see it, right? And tomorrow might, since it's FOMC, then FOMC meeting might take price all the way down to this level, maybe reprice back into the range. But on a personal note, if I wake up tomorrow, I'm going to open my chart during London session and see what price is doing. Then I will enter according to what price is doing. Right? We are still bearish on the XY and bullish on the euro, right? And bullish on other pairs. But one thing we should know is that since we have a large range day, there is or is proving that whenever we have a large range day, the day that tends to follow it tends to, if we have a bullish large range day, we might have a bearish day that follows it, or a continuation, right? A continuation, but that continuation candle will be will not be very powerful. For example, same thing candle that happened here today happened on Monday 28th July 2025. This particular candle, look at the day that follows it. Now, why did it close above? Because we still have a fair value, there's still a draw on liquidity that remain untapped, and price still go for it. Now, because of the higher time frame perspective, look how price still continue to go higher, because they have a draw on liquidity here and a draw on liquidity around this area. That is how price tends to deliver, right? Now, since we are anticipating for a specific candle like this, not a big candle, look at this big candle. What follows it is a smaller candle. This big candle, what follows it is smaller candle. So whenever we have a big candle, especially if that candle is going for a liquidity, for example, this candle has already taken the liquidity and price retrace back, right? Which is not exactly what we are looking out for tomorrow. Now I'm using what has happened before to give you an example of why I don't want to say I'm completely bearish tomorrow or bullish. But yeah, overall the draw on liquidity is bearish on DXY. So having knowing that in the back of your mind, we should anticipate for continuation in price. But while we are anticipating for a continuation, we should also look for a possible reversal area. That is where price is going to reverse to before we continue to go lower. All right, so that is it for the daily time frame. And I just add this, I'm going to take this off. So I'm going to take that off, but tomorrow I'm going to be looking at this line just in case price is showing any willingness to retrace back into our range. Now, since we already know where we are coming, sorry, I want to make sure I have that on a lower time frame. Since we already know where we are looking out for, that we are looking for DXY to continue going to the monthly candle range low, then that makes it very very good for us to continue or to expect price to continue going lower. And now if we look at the 4 hourly time frame, we have a fair value gap around this area. Sorry, I'm supposed to have already taken this daily fair value gap off my chart, but for some reason I'm leaving it, but I have to take it back. There's no need, I don't need it for my current trading area. So this is it. If you follow me on Twitter, you should be able to see this post I made on DXY. So one, we have a fair value gap here. Sorry, a tweet I made on Euro, right? I hardly even share my DXY chart on any social media platform since I already have it here. So we have a fair value gap here, which is very big, but I want to see price recoup it, right? Maybe when we open, price should stick back to this 4 hourly um this 4 hourly fair value gap. Is that enough to support a continuation lower? No, right? It's not really enough, but it is the key level that is closer. It is the bearish key level that is closer to the current price. Because if one of the things you should also know that if price above, if market price above it completely and close above it, then there is a higher chance price is going to reuse it as a support to continue or to now start going higher. But since we are still trading below it, then there is higher chances price is going to retrace into it before going lower. So that is it for the hourly time frame. I am going to remove this from the chart. I don't want to, I just want to see a plain chart since what I'm looking out for is simple and concise. Wow, my network is bad, so I'm trying to see if I can pause this video. So I don't know, so I can check my internet. But okay, my internet is back. Well, I don't know why internet was bad, but anyway. So tomorrow we have a on hourly time frame, we have a bullish, so a bearish order block here, and also a hourly fair value gap. So if Asian or during the early morning session take us all the way back here, then we are good to go. But the 4 hour fair value gap can still be very effective, so we should also put our take our attention to that and have take note of that when trading. So if we go on a daily time frame on euro, we have seen same thing occur on the euro dollar. But one of the things we notice on the euro is that price has already taken the previous month high, which is the CR, the candle, the monthly candle range high has been swept already, and price is still going higher. Why is price still showing very impulsive move higher? Is because of the dollar effect. Because of the dollar effect, price is still showing a willingness to continue higher prices. So because of that, we are going to still continue anticipating for higher prices, but tomorrow I'm not sure we are going to have a large range candle like this, but we're going to have maybe a bullish smaller range candle or a bearish smaller range candle. But one thing I also notice is that if we measure this particular uh candle, we have the 50% of the candle range here, and if even if we are going to be bearish, we're not going to get below this area, and price is going to remain around this area. So if I should add this to the chart, so that just the way it is on the dollar index, so we can have some similar thing here, then we know that price might also retrace here, then go higher. Just like I put in annotation, what I'm trying to say is we might see something like this, then go higher. Now this particular line you see is a fair value gap on a daily time frame, right? On a daily time frame, but I cannot go there, but let's just focus on what we have tomorrow. So this is what I'm looking at from a daily time frame perspective for the euro US dollar. We anticipating for a retracement into the today range, either below the 25 before the 50% of the candle range, before we continue going higher. Since the dollar is going to continue going lower, then there's higher tendency to continue to see higher prices on the EU. So on the 4 hour time frame, we have a very big fair value gap here, and also inside the fair value gap we have our our support area, whatever you call it, our support area where price is going to continue going higher. So if and also it is above our candle range 50%, so that is making it more higher tendency to see price react off of that area and go higher on the 4 hour time frame. On the 4 hour, if we have there is no reason except well, tomorrow is FOMC. We might actually, because of that news, we might actually see very very um expanded candle, but tomorrow is it's just gonna like it's going to be like a liquidity grab, right? Something that's what I'm looking at, like that is what I'm anticipating for. It's going to be a seek and destroy day, because what I mean by seek and destroy, we might likely see a bearish week above, a week above, and a week below, meaning they whatever whoever any trader that has been on this bullish move that didn't take their profit, they are likely to swipe them out, then continue. If we are going to continue higher, then continue going higher, or swipe the people that short, then before continue going lower. We have manual intervention tomorrow. Jerome Powell is likely to speak. So now on the hourly time frame, we have our support area around this price, and it is inside our hourly, it's inside an hourly key level, which is a fair value gap. And if we measure this high, this low, and this high, we have our 50% around this area. So which means that this on a smaller time frame, we have a a discount price around this area, which price is likely to reach into before going higher if we are going to continue to see a bullish move on the euro US dollar. Well, despite that, I don't have a concrete bias for this market. You can see how I have a statement or a condition that if this is the case for price, then this is likely to happen. And if you've been keeping up with me, you've seen that we are price is actually doing what we anticipate for price to do. But now it is your own part to do your own work to know when and how to participate in this price move. So similarly, this is the type of fair value gap, that yellow line you see on euro. This is the bearish fair value gap on euro. This is the example on GBP. So this is GBP. We've seen GBP also deliver very very bullish today, and yeah, we are going to continue to see a bullish move on GBP. Now, another interesting fact: GBP has not even yet just the way the dollar index is yet to reach for the monthly candle range high, so a monthly candle range low. GBP is yet to reach its monthly candle range high, which means euro is bullish. There is no short time behind it, because if this market is going to, if GBP is going to continue higher and the dollar is going to continue lower, there is a higher tendency that the euro is going to continue higher prices as well. So having knowing that, then tomorrow this, maybe this might have effect on price, or if GBP price above it, we might retrace into it, then, or price all the way to our previous month's high, candle range high, our previous month's candle range high. So that is very very a sweet annotation we can look out for in price. And with the way price is moving, it is showing a willingness, strong willingness to come all the way to this area. But if we fell short and and price begin to retrace, then we can now support, use this bullish order block to support, this daily bullish order block to support price, right? If we have a bearish move, then this particular order block can support bullish a continuation in price. That is if we have a major retracement. All right, if we have a major retracement, then this order block is likely to support price. Now, since tomorrow is Wednesday, if Wednesday deliver a bullish candle, Thursday and Friday will definitely deliver a bearish candle, because Thursday is what, a reversal day to the weekly range. So this is basically what you should anticipate for on GBP daily contract. So if we look at the 4 hourly contract, we see that GBP has a bullish order block here, which is likely for price to tap into before going higher. So GBP has more confluence on price than EU, right? We have more confidential order blocks and all, PDRA, like more confidential PDRA to look out for in price. But anyway, today price was very very good, and it's very impulsive price swing. So this, we have our 4 hourly a H4 order block, which price is likely to retrace into before going higher, if we are going to see any form of retracement. And again, we have this fair value gap that my price might react into and continue and come lower. If we price to this area, which is this fair value gap, then there is a higher tendency we are going to come lower into this daily order block and disqualify this 4 hourly order block. But if we did not get here and we retrace, then we are going to use this 4 hourly order block and this 4 hour fair value gap below the order block, which is also at a discount price on a 4 hour time frame perspective. Now, if you actually see the correlation in the dollar, EU, and GBP, you will now understand why I usually like to look into this market even when I'm trading, even when I'm not trading them. I might look at it so that I will get a complete, I will trust my buyers for the EU, and I will know what exactly the EU is likely to do. And yes, it will keep me on a safer like a safe track than just anticipating and taking trade without a complete confluence. Now on the hourly time frame, we still have that bullish order block still stand out, which is very very clear, and we be above it we have an inducement or relative equal lows. So there is a tendency price is going to retrace here before we see a continuation higher. And yes, if we get all the way to this level, I might trade GBP and target all the way back here, or high our monthly candle range high. So this is basically what I'm anticipating for GBP. And if we go to Bitcoin, right? So what did I tell you guys on about Bitcoin yesterday or Bitcoin the other day? I told you guys that, yeah, if Bitcoin, I was looking for a bearish move on Bitcoin, right? And I told you guys if Bitcoin didn't break below here, I'm not going to anticipate, I'm not going to take a trade. And because I am anticipating for the fair value gap, which is the weekly fair value gap, to deliver price lower, and we see that that is not the case, and Bitcoin is likely to continue going higher. And if we continue to go higher, then we have this buy side liquidity to reach into as our long time target. Then with this change in, or with this break of structure that we have here now, then there is a higher tendency Bitcoin is going to continue going higher for now. All right. So, and if you look at it on a 4 hourly time frame, we see that we have this close above, and also we have 4 hourly order block. Now I want to, now if I want to take a trade on Bitcoin, I want to see where Bitcoin is going to create a swing high on 4 hourly time frame. Now we have a swing low. I'm looking for where the swing high is going to be so that I can target it below the 50%. If the swing high remain around this area, then this particular candle will be our bullish order block, my bullish order block. And this, maybe if this become a fair value gap, then that will confirm the bullish order block, and we are going to use it to price all the way back, all the way to this previous month high candle range, candle range. So that is it basically on the 4 hour for Bitcoin. So you see why, if you are trading as a trader, you need to have a statement or a confluence for yourself. You need to know what you are doing. If you know your model, then you need to like say, okay, if price is going to do this, I'm going to do that. Otherwise, if price did this, I'm not going to engage. Just like I've been showing you guys on Bitcoin that, okay, if price did not do this, I'm not going to engage. I'm just going to leave price to continue to do what it's going to do. And we see that we actually consolidate around this area. Now we are leaving the consolidation after the manipulation around here, which is good. So any form of retracement will be a very good area to target price or to engage from. So this is our what, down close candles. Oh my god, these are our down close candle, and price is likely to retrace to this down close candle before going higher. But we want to see on the 4 hourly time frame where price is going to create a swing high. So until that swing high is created, before I will now measure the swing high, then use our discount PDRA, then my first target will be the swing high. And that if I take a partial from there, then I might move my stop to break even and leave it until we get to our monthly high, or when the weekly candle close, then I might just take my profit and wait and prepare for a new week. So this is just basically how you trade. And you've seen that on our daily videos I show you guys how to trade, or how to anticipate for this market. And please do leave a comment, just a thank you on the comment section will go a long way. And subscribe to this channel, as if this is the first time you are stumbling on this YouTube channel. See you guys tomorrow, and God bless you. Tomorrow is FOMC, anything can happen, so stay protected, guys. If London session will be good, but morning session, New York session might not be good for you to anticipate or to trade wins because of the FOMC coming. But London session might be a good session to trade before FOMC. Thank you guys. See you tomorrow.